Well, the crypto space is buzzing right now because we're seeing something that hasn't happened in a while. The Bitcoin price is correcting while Ethereum is absolutely ripping higher. Every crypto analyst and their mother is calling this as the beginning of alt season. And look, I get it. The excitement is real. But before you go aping into every micro cap hoping for that 100x return, there is some crucial information you need to understand about what's really driving this rotation. And trust me, it is not what most people think. In this video, we're going to break down the real reason behind Ethereum's explosive move and explore whether this rotation will actually trickle down to the altcoins sitting in your portfolio. Stick around because by the end of this video, you'll have a much clearer picture of what's happening in the markets right now. And whilst you're at it, hit that like button and hit subscribe if you're not already subscribed, as it really does help the channel out. Now let's start with Bitcoin. We've seen some interesting price action recently, and Bitcoin dominance has been showing some weakness, which has everyone talking about the rotation. Now, starting here on the daily chart, we can see that Bitcoin has peaked at this point in time at about 123K, just a little bit over. I've got some major liquidation levels marked over here that you can see, both above and below price. Above price is major liquidity between 123 to about 132K. And the closest one below price, which is the one we worry about first, is between about 103 to 107K. That doesn't mean that there isn't liquidity in between. These are just the absolute highest pockets of liquidity right now. And so they become our macro area of interest. I want to talk about what is happening since Bitcoin bottomed out here at around 75K. And I think there's potential for this to be an Elliot wave structure. And look, if it does turn out to be that way, then the pullback that we're seeing now since the 123K, it won't last very long. So let me explain that a little bit more clearly. This move up here has a potential to be wave one of an Elliot wave with this wave two right here. Now, if that turns out to be the case and we draw our fib extension tool onto it, wave three, we don't want that to be shorter than wave one. So at a minimum, we want to see wave three reach the 100% range, and that's going to put Bitcoin at about 135K. When I have a look at this potential first wave, I can see three clear areas of volume, which is where the TBD system comes in. And if you're new to this channel, I trade a very specific method that involves high levels of volume that we assume to only be market makers. But when I'm looking at high time frame macro analysis, I like to also marry that with Elliott wave. So when you have a look at this through here, this combined with the volume and the Elliott wave theory, this could be your 5-wave complete of a wave one. Now that would be more obvious on a smaller time frame. I'm not going to go down that far, but essentially you can see that this would be something like a wave one, pullback, a wave two, pullback, a wave three, something like that. It's not exact, but it doesn't matter. You can see that there's potentially 5 within this rise, and then this through here would be the ABC correction. So that makes this wave one, wave two, and we're potentially in the wave three. So then when I dissect the wave three, I can see potentially 1, 2, 3, there should be a 4, and there should be a 5. And that again might take us to the 100% range at around 135K. So if that is to play out, it's not confirmed yet, but if that is to play out, we would be expecting something similar to this to happen right here. So if we basically just clone that price action and move it across to what's happening now, it could end up looking something like this. So a little bit of a pullback, but nothing really to be majorly concerned about. The thing is that could end up taking about a month. So that may put us into a bit of choppy price action for a while. If it does take that long, it's likely that the daily timeframe 200 EMA will continue to move up to meet price, and then would probably end up having a target of a higher low somewhere around the daily timeframe 200 EMA at the time, which is not there yet. So we would have to reassess that. So then let's talk about this, because if we're going to get this daily time frame ABC correction, then a lower time frame might help us to identify A, if it's happening now, and B, where that correction might end. So having a look at Bitcoin now on the 4-hour time frame, now switching to the TBD system, we can see here that since our peak formation low right here, we had our 3 levels of rise on the 4-hour time frame. And since then, we've created the M formation. Now, when I have a look at that M formation, this would equal that potential ABC correction on the higher time frame. And usually once you have the initial drop, which is the A wave, we'll come back to the 61.8, which is exactly what we can see has happened now. And then we created the lower high there and we've headed down. Now, right now we're consolidating because it's the weekend. So there is a chance that this is not finished yet and it may continue into the new week. Now, I've seen a lot of analysis online saying market might start to correct next week. And I'm like, Captain Late. The market might not correct. The market is already correcting. The high was at 123 and the price currently is 117. We're already correcting. And we knew this was coming in the Discord, and this is where we looked to hedge our positions. This was the M formation before the breakdown actually happened. This is on a lower time frame, but this price action right here was this through here on a lower time frame. And following on from that, come Friday, we hit our first target of the low of the day. Now, when things happen in threes, you can see on this chart, which I'll show you live on a smaller time frame in a second, but you can see that this was drop 1, this was drop 2. So we're still expecting drop 3. So then back to the 4-hour time frame, what I can see here is that the target becomes around the 0. When a price retraces to 61.8, the price becomes the 0. Now that 0 is very interesting because it lines up with around 50% of this vector right here on the 4-hour time frame. And we also have a high level of longs in that range as well. So this range is about 115K for Bitcoin. So let me show you those high level orders. We can see here quite a lot. Okay, so everything that is white would be classified as high level orders, but within those high level orders, I'm looking for the highest amount. So you can see here at 116,300, there's 428. Okay, it's significant. It's not massive. When we come down to the 115, see how it's 1.94K. So that is a very big area. And if we actually did come down there, I would expect, providing those orders stay there, which is not a guarantee, but providing they stay there, I would expect the price would bounce from there. And that would line up with this analysis of the ABC correction into the daily time frame pullback before the next wave. It would just line up with everything. And there's a chance that when we get there, people will start talking about deeper corrections and miss out on that pivot, and then we move out fast and then they have to FOMO in. All of that is speculation at this point in time. We have to wait and see what happens if we get there. But at this point in time, that's what I'm personally looking out for evidence of, and that's where I will be reacting if I see price come into this zone and give us a strong buy out of it. Now, moving down to the 1-hour time frame, just to add some confluence, this was the trade that I was talking about. So we had the initial drop down through here, which gave us the 1-hour time frame level 1 drop. That was also the end of the 33 trade. I've spoken about this on prior videos, so we won't waste time on that part of the analysis again. But that hit the target to a T. Following on from there, we had our retracement. This became my area of interest to start looking for new short positions. And you can see that we rejected very many times in that zone, which led to then our 1-hour time frame level 2 drop. Now, sometimes the levels won't completely play out into a new week, but I'm still hoping that it does because of everything else that I've explained already in this video. So my idea of what I think might happen, which, may not happen because I don't know, but this is what I think might happen, is there's a good chance that level 3 is yet to come on this 1-hour time frame. And again, if it does, it puts us into that exact same zone that I've been talking about. You can see here that there's also a lot of liquidity in addition to those buy orders. So we've got a key level, we've got liquidity, we've got high level buy orders. It just kind of would all be so good if we came down there and got a strong bounce out of it. Now, let me go down to the 15-minute time frame, which helps to show the weekend trap so far. So we can see the trap gets set on Friday during the UK or the US session. You can see here, this was a typical trap, okay? So they ran the price up in the UK, brought it back down in the US. This traps longs and shorts, depending on your emotional sentiment, and it traps them into weekend sideways price action, which is what we can see is happening right now. So for me, when I look at where the liquidity is, I think it would be ideal if the false move this week took us up to take out this liquidity above here. I can also see that there was a high level of shorts at 119,500. Let's just check if they're still there. They're here. Now, they're not super high. That's my only concern, but I'm wondering if they don't need to be because it's weekend price action. So look, I am 50-50 on that, but it is what I can see at this point in time that is closest to price. So if we were to come up somewhere near there, it would wipe out this liquidity right here, which is sitting at a few 100 million, right? And if that turned out to be the false move, we saw weakness there, wicks to the upside, M formation, V top, that sort of stuff. That could be where we see the rejection to then come down for the level 3, to then start looking for pivots at around 115K. Being a crypto trader means most of your income is earned in crypto. And honestly, sometimes that can be really frustrating when it comes to spending in the real world. We work so hard analyzing charts, making trades, and building our portfolios. But what's the point if you can't actually enjoy those profits? This is my weekly ritual. I love buying myself fresh flowers to make my home feel beautiful and put me in a good mood. And when it comes to spending my crypto earnings on the things I love, I use the KAST card. KAST makes spending crypto as easy as using any regular debit card. You can top it with USDC, USDT, or other stablecoins, and it works instantly at over 150 million merchants worldwide. You can add it to Apple Pay or Google Pay, and it converts your crypto to dollars automatically at the point of purchase. And the best part? Their free K card gives you 4% cash back on all your spending. But I have the X card, which gets me 8% cash back, meaning my flowers today actually cost me 8% less than if I had paid any other way. And if you understand girl math, that basically means my flowers were free. If you want to start spending your crypto earnings on the things that make you happy, I recommend starting with the free KAST card. You can literally download it and set it up in under 2 minutes. No bank account required. If you use the link in my description, you'll get a 5% cash credit to get you started, but that's only for the month of July. Just make sure to check out their terms and conditions on their website before ordering your card. Trust me, being able to seamlessly spend your crypto profits on life's little luxuries is a game changer. Now, this Bitcoin weakness combined with Ethereum strength has everyone pulling out the classic path to alt season chart. So let's talk about why that has the crypto community so hyped right now. For those who might be newer to crypto, let me explain this path to alt season concept that's been making the rounds on crypto Twitter. The theory goes like this. First, Bitcoin pumps and leads the market higher. We've definitely seen this phase over the past year or more, with Bitcoin hitting new all-time highs. Second, the money starts to flow into Ethereum. As investors look for the next best risk-adjusted return, this is exactly what we're witnessing right now, and it's got everyone excited because historically, this has been a pretty reliable signal. Now, third, what you can see here is this is where it gets interesting for altcoin holders. The money then flows from Ethereum into large caps and then mid caps and then eventually into smaller micro cap projects where the real explosive gains happen. Now, this sequence has played out multiple times in crypto history, which is why we're seeing Bitcoin dominance drop while Ethereum pump has traders salivating at the possibility of an alt season being right around the corner. So the logic is simple. If we're in phase 2 right now, then phase 3 should be coming next, right? Well, not so fast. And this is where most people are missing a crucial piece of the puzzle right now. Let's take a look at what Ethereum has been doing lately because the move has been absolutely phenomenal. I'm going to start with the ETH BTC chart. There's been absolutely no chill, not even over the weekend. Now, I'm on the daily chart for ETH BTC, and there's two significant levels that I want to point out to you. The first one is the daily time frame significant level, which is at 0.032. That is where it looks like ETH BTC is trying to get to right now. The second one beyond that is a very significant level. It's this area up here, and that's because it's a weekly time frame key level. Okay, we can see if we zoom out on the weekly, we can see it was a high here, it was resistance here, and if we come back there, we have to wait and see if it becomes resistance again. So the way that I'm looking at this price action is pretty clear. This is a level 1 rise. This was the pullback into level 2 rise, meaning that once this move is over and we head into some consolidation or a pullback, this should still be a level 3 rise to go at the very least. Maybe that level 3 will take us up into this weekly significant level. For now, what's important is to see where ETH BTC tops out temporarily, because that's where you can start looking for pullbacks. If you want to get into ETH, when we start to see some weakness here, you can start to then pick your levels to buy in. So that leads me to the ETH USDT chart. And again, we can see here it's sitting at $3,700 at the time of me filming this video. Again, absolutely no chill over the weekend. And the key level for ETH USDT is around $4,000 at this point in time, because it's a previous resistance here. When you zoom out, previous resistance here as well. We may head into some challenging waters if we do get around the 4K zone. But again, if it does keep going up somewhere around there, the challenge may just lead to a pullback, considering so far all we see is 1, 2 rises. We would assume there's a third to come. So maybe that gives us the pullback, and then the third rise takes us to at least the prior all-time high at around 4,800. Probably beyond that, but for now, that's, safe analysis. Also, when we draw the trend-based fibs on ETH USDT, we can see we're at the 100 now. So this again may follow Elliot wave, and it's possible that it goes up to the 127, giving us the bigger wave for wave 3, which is what we like to see with Elliot wave before we get any temporary pullback. And actually, I'm going to go back to ETH BTC for a second, because I want to show you how beautifully that trend-based fibs is working on these two significant levels. So when we use trend-based fibs on these two moves here, you can see the 127 aligns up with this significant daily level, and the 161.8 is in my area of interest. So definitely two key areas for me to keep an eye on with ETH BTC right now. Now, one other thing about where we are in the cycle right now, if we have a look at the bull market peak signals, you can see none of these have actually fired yet. However, some of them are starting to move towards their high range. The crypto Bitcoin bull run index is at 91%. Bitcoin trend indicator is at 87%. The golden ratio multiplier is at 87%. And there's a few others here that are starting to head into getting closer to the 100% range. That does mean we are in the late stages of this cycle, and slowly profit taking at all new highs is going to be how you cash out of this cycle with the most money possible. But here's the thing, this Ethereum pump isn't just about technical analysis or typical market rotation patterns. There's a fundamental catalyst driving this move that changes everything. Here's what most people are missing in their alt season analysis. Over the past few days, 3 major crypto bills have passed through Congress, and one of them has completely changed the game for Ethereum. The biggest game changer is the Clarity Act, which has officially solidified Ethereum's status as a commodity alongside Bitcoin. Now, this might sound like boring regulatory stuff, but the implications are actually massive. Here's the kicker, and this is the part that should make you pause before aping into every altcoin on your watch list. While Bitcoin and Ethereum have gained clearer commodity status, the classification of other cryptocurrencies is going to be determined on a case-by-case basis under this new framework. So what does this mean? It means that many altcoins will likely still be considered securities by the SEC if they fail to meet the specific digital commodity criteria. So while Bitcoin and Ethereum get this regulatory clarity and preferential treatment, your favorite DeFi token or meme coin might still be stuck in regulatory limbo. And here's the smoking gun that proves this regulatory clarity is the real driver behind Ethereum's move. We have seen massive inflows into Ethereum ETFs over the past few days. In fact, we're talking about the highest inflows ever recorded. This right here, this isn't retail FOMO or technical rotation. This is institutional money flowing into Ethereum, specifically because of its new regulatory status. What it means now is that large institutions and funds can now confidently allocate to Ethereum, knowing it has the same commodity classification as Bitcoin. So when you see Bitcoin dominance dropping and Ethereum pumping, it's not necessarily the beginning of a classic alt season. This chart right here is the Bitcoin dominance. We've broken the key level, great, and the dominance is moving right down to the downside. We also have stablecoin dominance right now at a key prior resistance. We want to see it break down further. And if you were to only look at the total market cap, you might think every altcoin is pumping, that's alt season. I've maintained on this channel that we will have narrative driven alt seasons, not an overall alt season. And that is proven when you have a look at the ETH dominance. See how that is absolutely peaking. This is a big reason why we're seeing total rise overall. Compare that to something else like Solana dominance, and look, it's really not doing anything all that exciting at all. So a lot of this move that we're seeing in the total is coming because of the rotation into ETH as a result of the ETFs. Now, don't get me wrong. The passage of these three crypto bills is absolutely bullish for the entire crypto space. Having clear regulatory frameworks is something we've been waiting for years. But I want to caution you against assuming that this current rotation will automatically trickle down to every altcoin in your portfolio, especially the bottom of the barrel ones that influencers have promised 100x return on. The regulatory clarity that's driving institutional flows into Ethereum doesn't extend to most other cryptocurrencies yet. This doesn't mean alt season will never come, but it does mean that we need to be more strategic about how we think about this rotation. The old playbook of Bitcoin pumps and ETH pumps and alts pump might not apply in the same way when regulatory clarity is the primary catalyst. But here's the silver lining. These regulatory developments are laying the foundation for massive institutional adoption. We're moving from a speculative retail-driven market to one with real institutional infrastructure and clarity. While this current rotation might be more selective than traditional alt seasons, it's setting up the crypto market for much more sustainable long-term growth. And as more cryptocurrencies gain clarity on their regulatory status, we could see waves of institutional adoption across different sectors of crypto. So the key here is to be patient, to stay informed, and position yourself in projects that are likely to gain regulatory clarity rather than just hoping for a broad-based alt season pump. The crypto market is maturing, and that's ultimately a very good thing for all of us.